this year they did a lot of work sectorally. So
Okay.
they had a section just for food and beverage startups. So
Nice.
they did a very interesting hack. They
Huh.
got all the food startups, whether it's QSR or packaged food, in the morning to host a investors breakfast. So they gave
Oh.
us small stalls, so you could go sample food, talk to them, understand.
Huh.
They similarly did a small panel for travel startups, fintech.
Nice.
That was good, and it's a good scale event to meet a lot of people in like 1.5 days.
Sure. It's also one of those. It's a good event for visibility. If you want to
Absolutely.
just get back on the radar with a few people.
Absolutely. At one shot, you can,
Yeah.
and a lot of us just, like it's paid forward. So you'll see a lot of senior people like Sanjeev Vikchandani, Deep Kalra,
Yeah.
every year being there just to pay it forward.
Hmm.
Lot of volunteers, ex-founders, yeah.
Yeah. I couldn't make it this year. Last year, of course, I was speaking, but yeah.
Yeah.
Apu, we can begin.
Okay.
What
Great.
do you think, people?
Uh, why don't we start by all of you using the chat bot and telling me what would you like to learn about? I have some slides, uh, but I'm not fixated on a preset narrative. Uh, Obviously, the topic is how do we raise a round and what should your pitch be? And pitch has two parts. There's content and there's communication. Communication CJ is already covered. I intend to largely talk about what the pitch should be. So if all of us can take 3-4 minutes, just type out on the chat board. There is a chat box in the bottom right. Can you see it? It's
Yeah.
the yeah. If all of you can just take out what would make this really, really useful for you. We'll get into specifics then. Toughest questions to expect during a pitch. Very nice. Biggest mistakes. How to convey long-term vision. Pitching for a company. Okay. Who's global valuer? Someone called global valuer who's asking a question. And that question is on valuation. So sounds like a professor asking a question to a student.
Hi, Apurva. This is Avi from Cybees.
Acha, acha, acha. What is global valuer?
Actually, I logged in from some other email ID today. It's my mom's NGO's name.
You had me scared. Yeah, I thought it's some Harvard Business School professor who's called global. Great. So the good part is none of these questions I decided to cover. So which basically means I'll quickly first cover these or first cover the deck and then we can get to these questions. And feel 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 keep typing. Uh, this 1 hour is not enough to cover everything. So we'll cover whatever we can and then we can do another follow up. Is that fair?
Sure.
Great. Let me know when you can see my screen. Is the screen visible?
We can see it.
Yes.
I'm just trying to make it full screen now. Due apologies to all the women founders on the call. I was looking for a flying woman. I couldn't find a good, suitable image. So this is me. We'll not get into it. You know me. These are some of the questions which I thought we'll discuss. And I'm going to add your questions to this so that it becomes more comprehensive. I think some of the things where should I raise from angel or VC? What are the various fundraising stages? Even before Series A, there are 4-5 stages. What does equity dilution mean? Safe? How much should you dilute? How do you determine valuation? What are cap tables, shares, and vesting so important? Where should you incorporate a company, which could be less important for DTC startups, but more important for deep tech and others? What is the best time to start fundraising? Most people don't understand that fundraising varies by months. There is both the data and art behind fundraising on which month should you fundraise in. What exactly should I include on my pitch deck? How should I structure my first meeting? What questions will early stage VCs ask? And how do I build authentic relationship? What happens if an investor ghosts me? I think most people don't take this well. Most founders take it very personally. How do I follow through? At times, what happens is I've seen founders get a verbal commit. So somebody tells them, okay, I'm investing. And they don't know how to follow through and close and bank the money. So we're going to talk a little bit about that. First quick one, should I even raise money? Now, you will say you guys are investors and you're saying, hey, you're starting the conversation by saying, should I even raise money? I genuinely think if you can bootstrap your business and not dilute or dilute very infrequently, that's an ideal option because you can use debt for women founders. Even if one founder on your team is a woman founder, you have multiple government schemes and grants. There is Mudra, which gives you low cost loans for as little as 7%. Today, and I'm not suggesting you do that, if you take a Mudra loan at 7-8% and even deploy it in public markets, you will get a 15-20% return. So if you're a solo woman founder or if you're a woman founder in a larger founding team, tons of options. If you're a revenue making startup, you can easily get bank OD at 8-9%. Venture debt market has become very competitive. 10 years ago, it used to be 18-19%. Now you can get venture debt from companies like SIDBI at 12.5, 13%. If you're an EV startup, you can get debt very, very cheaply. ADA gives it to you as low as 6.5%. So even when you think about raising versus not raising, I wanted to start here. Now, what kind of businesses should raise money? Typically, when an investor comes in, the number one expectation is very high growth. The minimum growth expectation for a startup, if you're very early stage, the expectation is that you'll be growing 40-50% Q on Q. So if you're doing 1 crore in 1 quarter, the expectation is you will be doing 1.4 crores next quarter. That's the minimum expectation. If you are a late stage or a mid stage startup, minimum expectation is 40% YOY. Early stage, 40% Q on Q. Late stage, at least 40% YOY. The reason why this is important to VCs is when early stage, when they, so say example, Aditya, if a VC, early stage VC comes in on fit faced, they are going to give you a valuation multiple of 8 to 10 times of revenue, not EBIT. Your EBIT might be 5% of your revenue, or you might be in negative early on. So if you're doing 1 crore a year and they're giving you, say, a early stage 10 crore valuation and you're not making any money, if you don't grow at 100% year on year, the revenue to valuation multiple will not catch up, which means they will never make money. So the number one thing which VCs and investors look for is, are you growing at a rapid clip? If you're pre-revenue, they want to see number of users growth. If you're in consumer internet, so Saurabh, for Travel Buddy, it would be very important to show the number of users growing. Ideal is number of users is growing. Number of downloads is growing, number of users is growing, repeats is growing, average order value is growing. That's like the holy troika, that all numbers are growing. In some startups, only two will be growing, and then you will say, hey, we are right now not focusing on monetization, we are doing a land grab. We want to get to a scale. Or we are driving trials and sampling, and we're building a usage behavior. The challenge here is if you don't monetize for too long, it becomes very difficult. A great example is a startup called Coup. Coup at one time was supposed to be the Twitter of India and was really supposed to, take over and do very well. They delayed monetization too long, and now they're in talks to actually get acquired because they've not been able to monetize. Any questions here? Feel free to stop me. This is a conversation. Now let's talk about the fundraising stages. You have pre-seed, seed. Actually, even before pre-seed, you can do a friends and family. Friends or family is most of us would either have friends or family. In some cases, friends who are family, and in some cases, family who are friends. Ideal. We would know someone. Friends and family round typically in India is 50 lakhs to 1.5 crores. If your family is very well to do, friends are very well to do, you have a great business school network, engineering network, and depending on how early are you starting. Typically, people who work for 10, 15 years, it is very easy to do a 3 crore friends and family round. Because all you are asking is 30 people, 10 lakhs each. And if over 15 years of working and 20 years of schooling before that, 23 years, college, schooling, if across, by the time you're 30, 35, you don't know 30 people who can put in 10 lakhs, I don't know, it's tough. So 1 crore to 3 crore friends and family round is very usual in India now. Obviously, when you're doing friends and family, they are not backing you because the valuation is very attractive. They are backing you because they have known you for a long time. They know you are sincere. They know you are high integrity. They know you are hardworking. Typically, वो हिंदी में बोलते हैं ना, कुछ ना कुछ कर लेगी, कुछ ना कुछ कर लेगा. They will at least return our capital. We are backing a young, dynamic person or a group of people. छोटे से छोटा 50 lakhs raise हो जाता है. Even if it is 5 lakh person, 50 lakhs raise हो जाता है. The intention of a friends and family round is typically create your company, build a product, and start getting some customers. Like if you're a DTC brand, you would need to get packaging design done. You will need to get some photography creatives done. You will need to order a minimum BOQ. अगर वो भी order नहीं करोगे तो आपके पास product नहीं आएंगे. Maybe there is some listing fee you will end up paying in some e-commerce platforms. By the end of friends and family round, minimum expectation is that you will have a nice investor deck, you will have a website, you will have some products to show, and you would have some traction. उसके बाद typically pre-seed होता है, and we will start getting into the details. Pre-seed के बाद pre-series होता है, and then उसके बाद A, B, C हो जाता है. On this call, we are largely, BOQ is order quantity. So it's like MOQ, CJ. So if you're ordering products, so say if Aditya is trying to order protein bars, a supplier will say minimum मुझे 5 लाख का order चाहिए. उसके बिना मेरा production run नहीं हो पाएगा. If Rini is trying to book a hotel, they will say, hey, barter कर लेंगे, but minimum, I need 100 guests in that event. And then I can charge them on the spot. You don't need to give me a minimum guarantee. Something like that. Most of you typically right now are between friends and family and seed. because I've seen the revenue, I've seen the traction. None of you are at even pre-series A level. You are mostly between friends and family and seed. So Rini, you might be at a friends and family round. Aditya, you are at a, I would say, a pre-seed level. Uh, Saurabh, you would be between pre-seed and seed. So all of you are here. And that's what we are going to focus on. Now let's understand average typically size क्या होते हैं इंडिया में. Friends and family, I was saying, is about 3 crores. 3 crores for a good friends and family round. Yeah, if you're a non-tech product and need to start production, how do we go about it? So Rini, first step would be to create a financial plan. To start production, to start business, कितने पैसे चाहिए? Even if it is friends and family, somebody might ask you, कितने पैसे चाहिए? First step is to build a financial plan. And I would say initially build a very conservative one. Because if you're getting into a new business, an aggressive plan assumes that everything will go well. The converse is largely true. When you actually dip your feet in the water, it's either too cold or too hot. So build a very conservative plan, and you don't want to disappoint friends, family, and they'll say, "अरे अपने तो बोला था 50 lakhs में, आप 10 crore का business करने लग जाओगे." बहुत conservative बनाओ, आराम से बनाओ, and these are people who are fond of you. These are not sharks, VCs. Business plan will help you decide how much to raise, and that will help you get into production and other things. Business plan does not need to be like a consultant's business plan with all bells and whistles, scenario planning, sensitivity analysis. All that can come at a typically pre-series A, series A level. When you're typically doing pre-seed, seed, friends and family, a very simple Excel with broad cost elements, with a pessimistic, realistic, and optimistic teen scenario is good enough. No details. So if you're saying, hey, my cost of packaging is going to be this, because you're getting into a business, an investor might ask, have you got some quotes? What is the order quantity required to get this? You should be able to narrate, hey, these are the suppliers, I've got some quotations. That shows conviction and detail orientation. This is for 2021. 2023-24 is 30 to 40% lower than this. So I'm using this data. We pulled it out from PitchBook. I'll try to get an update on this and share it with all of you. Because you are typically in seed, pre-seed stage, a typical round is 4 crores to 8 crores. A 4 crore round is a good round if you're at a pre-seed level. 8 crore is an excellent round. At no stage you should be diluting more than 8 to 12%. 8% is a very good dilution. 12% is on the outer side. Because 12% typically means over 5 rounds, you would be down to 20% shareholding. Then there are mechanisms later on when you're negotiating with the investor. You can always say, hey, if I hit certain revenue milestones or traction milestones, I will claw back some equity from all investors. Typically, that happens post Series B. So try to keep your dilution low. Any questions here? Okay. Now, angels versus VCs. Some of you also asked me this. Angel investors ka India mein na, it's governed by SEBI. So your minimum net tangible asset should be 2 crores. This 2 crore of net tangible asset has to be other than the primary house in which you live. And as per SEBI norms, that primary house should not be on any kind of lien, debt, or housing loan. So SEBI says you're a registered angel investor when your net worth other than your primary house is more than 2 crores. So your disposable income is more than 2 crores. Now, people are very casual about it. I don't think people even know about it, but this is the regulatory aspect. Typically, angel investors are great for friends and family, seed, pre-revenue. Lowest people go to is about 2.5, 3 lakhs. And largest ticket sizes, if you manage to get a super founder. So recently, Sandeep Agarwal, who's the founder of Droom and Shop Clues, invested in Fiona, which is our portfolio company. So he put in like 15 lakhs. There are angels who will put in 25 lakhs. Smallest angel don't take money less than, I would say, 3-5 lakh. Ideally, try not to get angels directly on your cap table. Stop me. This is a very important concept to understand. Imagine you're raising 3 crores, or imagine you're raising 1 crore. I'll make it very simple. Now, imagine that 1 crore comes from 20 people who are giving 5 lakhs each, or 40 people who are giving 2.5 lakh each. Every time you're raising a subsequent round, you will need to chase all 40 people who have given 2.5 lakh each to sign papers. Some of them might be traveling, some of them might be unavailable, some of them might, for whatever reason, refuse to sign. Some of them might waste a lot of time asking a lot of questions on the round. 2 ways to avoid it. If it is typically a 2 crore round, say, hey, happy to give you a, what is somebody refusing to sign? What if somebody refuses to sign? Appeal to their higher well-being and their goodness of heart. कुछ कर नहीं सकते, बहुत painful है. That's why I'm saying 2 ways. Say direct cap table in 2 crore का round है. Direct cap table entry only if you are contributing to at least 20% of the round or 15% of the round. 2 crore का round है, अगर आप 30 लाख भी नहीं डाल रहे हैं, I cannot have you directly on the cap table. What is that? What is the option then? If I can't directly have you on the cap table, then what do we do? Either one of the angels will start a syndicate and lead the syndicate. So if CJ is coming in, CJ will say, hey, I'll start a syndicate. I will get some angels. And you, as the founder, you also get some angels. We will use the angel list, WFC, Let's Venture. We will pool in the money. And that money on your cap table will come as one line item. So in the subsequent rounds, you only need to manage CJ. Of course, it's a good idea to keep all the 20 people who participated up to date, involved, do periodic updates. But the signature will only come from CJ. So you don't need to chase 20 or 40 people. The other way is some founders will say, I will start a RUV. RUV is a syndicate run by the founder. The full form of RUV is roll up vehicle. Roll RU up vehicle. These are typically syndicates started by the founder. And typically the founder will say, hey, I don't need any carry. So when a CJ or Apurva start a syndicate, we are professional angel investors. We are taking the risk. We are organizing the money. We would charge a carry. The carry is typically 20% when the exit happens. Now the founder will sweeten the deal for angels and say, hey, I don't need carry. You are backing me when I need the money. I don't need to make extra money off you. Which means there will be no carry. There will be some carry which the angel platform charges. So Let's Venture will charge 5%. WFC will charge 3%. Angel List will charge 5%. But 5% is better than 20%. So the founder will say, Rini will say, I will start a syndicate, RUV on Angel List or Let's Venture. You'll save money because you're saving 15% carry. I will get the angels whom I have individually collected on it, and the money will then come as a single check into my balance sheet, into my cap table. And because I own the RUV, I don't need anybody's signatures. I can decide. Any questions here? This is a very important concept to understand. Jenny, Nimisha.
Apurva, could you just, this slide that you've put up? I think it might be useful to just talk through it. You know.
Sure. So typically, angels are people who have made money. They invest out of their own savings. It is a very high conviction bet because you're putting your own money. VCs typically don't invest any of their own money. They raise a fund. If you are a Cat 1 fund, the minimum amount required for an investor to invest is 25 lakhs over 5 years. If you are a Cat 2, Cat 3 fund, the minimum amount required is 1 crore. For example, if you take venture capitalists, say their fund 1 is 300 crores, and on an average, every investor has put in 1 crore. There will be family offices which have put in 20 crores. There may be institutions like SIDBI which have put in 50 crores. The only thing venture capitalist is doing is it's pulled in money and it is doing 5 to 7, 8 deals every year. Typically, if your portfolio size as a VC, like Sequoia has more than 300 companies in their portfolio. So even if the VC says, hey, I'll help you a lot, and every VC says, standard VC narrative hota hai, we are founder's best friend, we'll help you, we'll add value, kuch nahi kar pate. 300 companies. Angels will typically have a smaller portfolio. They are investing out of their own hard-earned money. For an angel, even 2 to 5 lakhs of investment matters. When you reach out to them, they will take out time and spend. Typically, when it's an early round, whether it's a friends and family round or pre-seed round, at times kya hota hai na, you can get into a valuation conflict. So you go to CJ and you like, CJ, this is incredible. Can you put in money? CJ says, hey, I love traveling. I love the unique experiences you're offering. I'll put in 10 lakhs. But I think you're asking for a very high valuation. Your revenue and multiple of revenue expectation is not aligned to what I think your valuation should be. In that case, you will say, hey, let's not fight over the valuation. Why don't we make it a convertible round? Maybe you're not right. Maybe I'm not right. Maybe the answer is something else. When we do a priced round, which means when a fund, an institutional investor comes in and they price the round, you will get it at a discount. So let's issue a compulsory convertible preference share, CCPS. Or you will say, let's do a safe note. Safe is, yeah. So safe is simple agreement for future equity. It was started by YC in 2000, early 2000s. The India equivalent is iSafe, which has been popularized by 100x VC. I have a slide which explains actually the difference between safe and, yeah. Actually, let's be here only. So all safe says is, I'm giving you money. At a future valuation, it will convert to equity. The name says it all. Simple agreement for future equity. I don't know how much equity will it convert to because that depends on the future valuation. So today I have given you 1 crore. I just have an agreement which says that whenever you raise a round, so if you raise a round at 20 crore, my 1 crore will convert at 5% equity. That's safe. Any questions on safe? Now
Apurv, not specifically on safe, but can we do a CCD convertible, compulsory convertible debt or CCPS? Like, what's the difference between the two?
So CCPS is shares, and typically the CCPS round will have a floor, it will have a ceiling, and it will have a discount.
Hmm.
The way it will work is you will say, hey, I'm taking in 1 crore. Uh,
Hmm.
in 1 year, if I don't convert and raise a round,
Hmm.
it will get converted at a floor of 10 crore.
Hmm.
So you have given me 1 crore. At the end of 12 months, you will have 10% of my company at a floor.
Hmm.
Then there is a ceiling.
Hmm.
Ceiling is, hey, even if I raise at 20 crore valuation,
You will get
your
it at a lesser valuation.
you will get it at 15.
Hmm.
And third is a discount concept.
Hmm.
In a discount, what you will say is there is no floor, there is
Hmm.
no ceiling. Whatever I raise at, if I raise within 12 months, you will get it at 10% discount.
10% discount.
If I raise at in 2 years, it will get converted to 20% discount.
Hmm.
Now, typically, what happens is because the stock market is very buoyant,
Hmm.
today, if you go and tell a smart investor you will get a 10% discount, he'll say, "यार, I'll wait then." Because
Hmm.
10% तो कुछ भी नहीं है ना. In
Hmm.
stock
Hmm.
market, I'll make 20-30%. तो 1 साल बाद ही कर लेंगे.
Yeah.
Hmm.
That time I can take a call.
Hmm.
So the discounting has become more aggressive now. So people are
Okay.
now talking about 15% in 1 year, 20% in year two. And the aim of founders is कि 15 पे या 10 पे convert कर लो. Don't at least let it get. मतलब 2 साल में raise नहीं कर पाए तो थोड़ा फिर मुश्किल है.
Yeah.
So CCPS is compulsorily convertible preference shares.
Hmm.
These shares are not debt. Then there is
Hmm.
CCPS, compulsory convertible debt
Debentures.
debentures.
Hmm.
Debentures have a higher. So जब liquidation preferences होते हैं,
Hmm.
because debentures are debt,
Hmm.
they have a higher preference over preference shares, and preference shares have a higher preference over normal shares,
Equity.
equity. So there is a stack ranking.
Hmm.
CCDS also has a coupon rate.
Yeah.
So the investor will say, hey, I need 8% return every year.
But it can be, I guess it can still be 0% coupon as well, right?
Yeah. Coupon rate, matlab, it totally depends on your nego.
Hmm. Hmm. Got it.
It is a young founder here. You want to say hello to everyone?
Hmm.
Hi.
Chalo, go play.
Hello.
Does that answer the question?
Yes, thank you.
Yeah, Prashant. Sorry, I just
Yeah.
noticed your hand.
Yeah. So, if we are structuring a round and say example 40% of our round is coming through government fund, example like Startup India Seed Fund or say other government fund, which has equity as an element also, and they are ready to put in through equity or through price round. But say 60% of the round is also coming through angels, and they are participating in a similar round, and they are negotiating on the uh, price like valuation. How do we structure that?
So my understanding is जो Startup India seed fund होते हैं, they typically don't do a equity round. They do a CCPS or they do a CCDS. So they don't take equity right now. वो 20 से 40 लाख देंगे आपको. It typically comes through AICs or accelerators which are certified by the government, and that will convert at a future round. They
Yeah.
don't directly value it, and this is a government norm. So ये law है. They are not
We've
allowed to
raised
price.
it. We've raised it, and they are OCDs actually, optionally convertible. So in a future date, they have either the option to convert into equity, or they will want us to repay the debt after like 5 years.
Absolutely. So
So
OCD is sorry.
yeah, example. So there in our current scenario, like in our habit scenario, so there's a fund which is through DST, Department of Science and Technology. So they are, and in that, like there are three instruments that they can use. One is CCD, one is equity, and third is debt. And they are ready to put in through equity, uh, priced around for X valuation. And where there are certain angels who probably are not coming on that particular valuation, which is higher given by the accelerator, by the incubator. So how do we structure that? Because now Like angels are probably not ready to come on safe or CCD or CCPS. They want a priced round, but not at that particular valuation. So how do we do it?
No, so my understanding of your question is you're saying uh, there is a government
Mismatch
fund.
of valuation.
Sorry.
There's a mismatch of valuation between angels and uh, incubator.
So
Government
incubator हायर बोल रहा है कि लोअर बोल रहा है?
higher बोल रहा है.
तो 2 राउंड में स्प्लिट कर लो.
Okay.
2 राउंड में स्प्लिट कर लो, डजंट मैटर. पहले आप
Okay.
पहले आप एंजल का ले लो
Okay.
एंड उसके 2 महीने बाद एक्सेलरेटर का ले लो.
Okay. Hmm.
In fact, you can use one more hack. Take the accelerator term sheet,
Yeah.
show it to the investor, and say, 2 महीने में हमें ये वैल्यूएशन मिलने वाला है. ये ऑलरेडी साइन टर्म शीट है.
Okay.
तो at best, I can give you a 10% discount over this or a 5% discount.
Okay.
Ideally, it should not be a 20-30% lower price.
Understood.
Because sure है ना कि आपको 2 महीने में वो मिल रहा है.
हाँ.
Does that make sense, Prashant?
Yeah. Understood. No problem. I'll also connect with you separately on this.
हाँ, ठीक है. आपका I know आपका कुछ specific question है, so maybe we can discuss it later.
Yes.
Now,
Apurva, I have a question.
yes.
So, in case you're cap table, because you are doing friends and family, it's a lot of it is direct entry into the cap table. Your cap table becomes really large. Let's say you pick up a 3 crore, in over the next couple of months. Many of these people on the cap table are your very close friends. Okay, is it a good idea to go to the earliest people to clean off the cap table? And is there some set precedent, like you go, I mean, will they agree if you go and give them a 2x? Which typically they won't find in the mutual funds and all of that if they invest. I just want to understand what the practice is if you have a large cap table.
Very good question. So when you clean up the cap table, it's called a secondary. So the money is not coming into your company. It is basically going to help other investors liquidate their preference. A lot of incoming investors will not want that because that money is not available for a founder to grow your company. वो तो money बाहर जा रहा है ना, that's not coming into the company.
Right.
Which basically means I'm putting in 50 lakhs, but that money is not going to be used for growing Travel Buddy. It's going to be helpful to give some other people money back. So typically, इतने early stage में secondary नहीं देना चाहिए. Because that basically means you have to raise a higher round. That said, at times क्या होता है कि say आप 10 करोड़ का राउंड रेज कर रहे हो, 10 करोड़ वैल्यूएशन पे somebody is willing to put in 1.5 crores or 1 crore. Yeah, you're diluting, you're raising 2 crores at 10 crores. वो 2 करोड़ में से 1 करोड़ एक बंदा डाल रहा है. To sweeten the deal and to give him an additional incentive, you will say आपका blended valuation 10 करोड़ से मैं 8 करा दूंगा by giving you 20 lakhs of secondary shares at half the valuation, by giving some other people exit. So use it as a sweetener. But because that money is not coming into your company, you're not being able to use it to grow.
I understand this, and I have a follow-up question. Apurva. So what you're saying is, don't do the secondary too early. I understood that point.
Yes.
However, is there a specific, like for you, from your side, I wanted to get a benchmark. Is there average exit expectations that angels have? I mean, not that, any of our friends and family have come and asked, but it's been 1 year and 4 months, for example, since our CCPS, right? What is the average expectation?
You are a extremely lucky angel if you get an exit before 5-6 years.
Okay, I just wanted to understand that from you.
So I'm both fortunate, lucky, and I've backed good companies. My earliest exits have come 2.5 years, 3 years. Also, there is an implication. Unlike listed equity, where your STCG, so if you sell equity shares before a year, you're charged 15%. After 12 months, it's 10%. In startup investing, if you get an exit before 2 years, the effective tax rate is 40%. And after 2 years, it becomes 23. So it's not even good for your angels to get a quick exit. Does it make sense?
Yeah, it's very, very helpful. Thank you.
Prashant?
Very
Sorry.
अच्छा सॉरी प्रशांत का हाथ थक गया तो उसने नीचे कर दिया. Okay, I'm going to use the example of a simple pepperoni pizza first thing in the morning. I couldn't find a nice picture of a sandwich, so we're going to go with the pepperoni pizza to understand how SAFE's CCDS equity works. So now imagine you have a big pizza and you and your co-founder own 100% of the pizza. The whole pizza is yours. Now, let's assume the pizza is worth $20. Your objective is to grow the value of the pizza. It could be worth $20 now, but in 10 years, we want to make the pizza to be worth 1 billion. How do you grow the value of the pizza? You want to obviously increase revenue, but you want to give slices of the pizza to strategic people. They could be investors, advisors, and key employees who will massively help you. If nobody else is taking slices of the pizza has no value. Value is always in the eyes of the valuer or investor. As a founder like Zerodha, there are all kinds of articles where somebody tells Nitin Kamath the valuation of Zerodha is 10 billion. नितिन खुद ही बोलता है यार हमारा बिजनेस बहुत ही साइक्लिकल है. बुल मार्केट में एवरीबॉडी ट्रेड्स इक्विटी. जब हर्षद मेहता टाइप का क्रैश होता है नोबडी डज इक्विटी. आई थिंक वी आर ओनली वैल्यूड एट 500 million एंड वी आर नॉट रेजिंग. सो वैल्यूएशन इज ऑलवेज अ डिस्कवरी. सो पिज्जा को हमें स्लाइस का वैल्यू पूरे का बढ़ा के 1 बिलियन करना है. नाउ एवरी टाइम यू गिव अवे अ स्लाइस ऑफ द पाई, you're taking one slice of the pizza, giving it you're actually giving away equity in business. Equity basically means ownership. So if an investor has 5% of the equity in your pizza business, they own 5% of your company. Now, obviously, it is going to be unavoidable. You will end up giving out pizza slices and you will end up diluting. But if you give this to strategic people and good investors, they can actually add a lot to take the valuation of the pizza of the pie from 20 to 1 million, 1 million to 10, 10 to 100 and 1 billion. So even if you own 15% of the pie and the pie is valued at $1 billion, your net worth as a founder or founders will be worth 150 million. So it is easier to accept that you will not own 85% of the pie. You will own only 15%, but that 15% is going to be worth 150 million versus $20 right now. Clear? Because at times क्या होता है कि founders शुरू में ना बहुत केजी हो जाते हैं कि यार ये 10% ले रहा है, I don't want to dilute so much. So you have to think a little longer term than that. Now, valuation or dilution कैसे होगा? Typically 8 to 12% every stage. The golden standard according to me is if the founders still own more than 25% of more than 15% of the pizza after Series A and more than 30% after Series B. So if you own Series A ho chuka hai, you still own 50% of the company. Individually or as a group of founders, it's a good outcome. And at least 30% after Series B. Because after Series B, kya hoga? If you hit certain revenue milestones or traction milestones, in your SSHA, you can have performance-linked clawbacks where you get the equity back from investors. Because investors ultimately want the company to do well. So they will say, hey, if you get to CM3 positive or plus 10% CM3, we will give you 2% of the equity back. So on and so forth. So after Series B, you can always start clawing back the equity. Now, what are safes and why should you care about it? We said safe is simple agreement for future equity. This basically means they are not slices of the pizza directly, but think of it like a IOU or a ticket for a slice of pizza in future. You give these IOUs or tickets to the investors, which gives them the right to come back to you later to claim their slice. Of course, assuming the pizza is still, edible and has not caught fungus. So the company has to be doing well. Yeah. How do you choose smart money? Great question, CZ. So smart money is typically money which has a brand name. For example, if say Rajan Anandan, pre-Sequoia, he was an angel investor. He was known to be a great angel, someone who is very well known. He was the managing director for Google in India. So good name. Or Saurabh, Ajit Mohan. Now is the MD for Snap in Asia. Ajit is also a prolific angel.
Yeah.
Right? Good brand name. So a good brand versus a brand which is like, somebody in Jaipur, Indore who's not well known. First criteria. Second criteria is they have meaningful networks. And third criteria is they are going to leverage that network to help you. If an angel has a network, but they don't have the willingness or the ability to make the effort to use the network for you, they're not strategics. For example, if you're building something in travel, Saurabh, and even if we get 10 lakhs from Alok Bajpayee in Ixigo, or Deep Kalra, or Ankush Nijavan of TBO, very, very relevant, or Bhanu Chopra of Rate Game, or, somebody from a travel tech company, Aditya, for you, if we get somebody, so like in beauty wise, we got one of the largest packaging groups in India. It's a 1,000 crore company which only does DTC packaging to put in 50 lakhs. So packaging guy could be strategic. Jenny, in your case, if we get a fashion designer, if we get Reena Dhaka to put in 25 lakhs, brand name plus can use networks, or somebody who runs a very large chain and says that, hey, we're putting in money and we will help you with distribution. Like the Purnia's pop-up guy, if we get him to put in even 5 lakhs, 10 lakhs.
Yeah.
Does that make sense? Okay.
That was very useful, Apurva. Thank you so much.
Now, we've covered this, so we'll keep going ahead. Next logical step, how do you determine valuation for your startup? It's both a art and science. Typically, friends and family में लोग valuation नहीं पूछते हैं. But that said, they are also not going to be okay with a crazy 100 crore valuation. If I go to my dad and say put in money and it's 100 crore valuation, at least my dad is not going to put in money. So even friends and family ke liye, you need some valuation. But because it is so early, typically you can get away by saying it's 15 crore, 20 crore, 10 crore. They're okay. And if you don't want to shortchange them, because down round is also problematic. Imagine आपने अपने parents को बोला और friends को बोला और in-laws को बोला कि मैं 20 crore के valuation पे I'm doing friends and family. You start building and your next round is at 10 crore. It's a down round. They will feel disappointed. They might not say anything. So good idea is to do a safe round in friends and family and say, hey, I don't know what's the valuation. There is no floor. There is no ceiling. There is no discount. Whenever a valuation round happens, that safe will convert. Your first round should ideally always be a safe round. Because none of us know anything. And you should say, जब भी पहला राउंड होगा, वो same terms पे आपका convert हो जाएगा. Any questions here? No question means either all of you need coffee or I'm terribly boring. It can be both also.
No. I have one question, Atul.
Yes, please.
Let's say you get, not 3 crores, but around 7 or 8 crores or 10 crores. Okay. But the condition is that your valuation is too high. So is it okay down doing a down round? And will the investors be okay? All the friends and family be okay with it?
आप down round की जगह आप ऐसे बोल दो. So there are two ways. The worst option is a down round. The best option in this case, you're saying कि मैंने friends and family के साथ 10 crore raise किया. 1 करोड़ रेज किया था 10 करोड़, नहीं आप 7 करोड़, लेट्स यूज योर एग्जांपल, से आपने फ्रेंड्स एंड फैमिली के साथ 50 करोड़ पे 1 करोड़ रेज किया था. Now you are raising 7 crore at 25 crores. So it's a 50% valuation haircut. You are saying, will my friends and family which had come in at 50 crore be okay? Because they will get diluted down. So इसमें दो चीज है. One is the preferential strategy for you is to tell investors, hey, put in 7 crores, but don't do it at 25, which you want to. Why don't you make it a convertible round? If I raise the next round at 50, you will get a 10% discount. If I don't raise it at 50, it will convert at 25. That buys you 6 months or a year or 2 years, depending on how you negotiate it. That's your preferential strategy versus you saying, let's agree at 25 crores. See, even if friends and family don't say anything, na, वो क्या होता है बाद में पेपर वर्क में it becomes like, why did they do a down round? What happened? वो थोड़ा सा लास्ट ऑप्शन है. Does that answer?
But will the but only question is, will, if it's a larger funding that you're getting, will the VC
CCPS
agree for?
Yeah. CCPS is a very regular thing.
It's not necessarily that they'll only tell you to go for a price round.
कन्विंस करना पड़ेगा, बिकॉज आप क्या बोल रहे हो कि यार देखो आपको 25 करोड़ चाहिए ना, वी थिंक द वैल्यूएशन इज हायर, व्हाई डोंट यू पुट इन मनी? अगर हम 12 महीने में रेज कर लेंगे तो आपको 20% डिस्काउंट दे देंगे. तो नाउ आपके लिए फायदा हो गया सौरभ, बिकॉज आपको 25 करोड़ से ऊपर मिल गया. एंड अगर हम रेज नहीं कर पाए तो वी विल कन्वर्ट एट 25. तो यू वुड आपको 12 महीने ही थोड़ा एक्स्ट्रा लगा ना, बट आपको 25 करोड़ में मिल जाएगा.
Understood. And you have the funds also to grow by then.
So even if you have to give a higher discount on CCPS, if you are very bullish कि हम higher पे raise कर लेंगे, then CCPS is a good idea. If you're not bullish, then you have no option but to do a down round. Down round basically means the situation is very bleak.
Understood.
Yeah, Raj.
Yes.
Raj, you're on mute.
Hi. Good morning, Apurva and everyone.
morning.
Sorry, Apurva, I was a little late join this.
So Raj,
Apologies.
we have a tradition. Anybody who's late buys drinks for everybody whenever we catch up next.
I am on it. I swear by it. We'll do this. Really sorry, apologies. I have
No.
a question in line with what we're talking about, and there's also an example. So when do classes kick in, like class A, class B, right? Which means voting, etc. And my question in this case is just anecdotal, but if when we know that the first check for Facebook was written by Peter Thiel at about $500,000, that's what documented, right? Would he have come in at a class A, or would that have been too early? Because we all know that Zuckerberg owns voting rights because he owns, class A, and the investors who are huge, part of it still don't own that much. When does that? Can you just explain a little bit? If it's
So Raj,
possible?
typically na friends and family pre-seed, seed में no investors will agree to a differential class of shares. So Zuckerberg ने भी अपने class of share शुरू में नहीं किए, वो बाद में बने थे. जैसे Google में the shares which all of us, there are 3 class of shares in Google. There is a class A shares which only founders own. There is a class B which have voting rights. So class A और B में क्या फर्क है? Class A का each share is worth 100 votes compared to 1 of B. And there is C which has 0 voting rights. So C trades at $1.50 discount to B. A is not available because it's only founder shares. So founders will always have more voting rights. They will never be outvoted. Very, very uncommon in friends and family pre-seed and seed. Because see, your friends and family might agree. But उसके बाद जब angels आएंगे या micro VC आएगा, they will not agree. They'll say ये क्या है? ये typically होता है when a big VC is, you're the hottest thing in town. By the time you reach Series A, you're having to hide because everybody is chasing you. Then you can negotiate and you can say there is a differential. That also many VCs will not agree. So you need to find a willing participant, VC, who will agree. The moment you create different classes of share, it basically means investors have zero control over you. Ola has different classes of shares. किसी company में है, but it's not a very common thing. And definitely you should not be worried about it till you hit Series A and beyond. Does that answer your question?
Yeah, just one last piece is at that stage. I understand the Series A bit because you need to have proven that you have, you know, that hot
And
or
you need to be
whatever.
the hottest deal in town for people to
Correct.
agree.
Or you have you know, pedigree, like maybe what Bhavesh is doing, like, you know, at any valuation things are happening. But my question is, at that stage, it's still possible to kick in that series, that preferential piece or the differential piece,
Yeah.
and saying, okay, these become founder shares and these are not something that will not.
See, जब भी नया round हो रहा होगा, all your previous investors will sign. See, because क्या होगा? For example, in your company, before Series A, you end up raising say 2 million. Typically pre-series के पहले लोग 1 से 2 million max raise करते हैं. आपने 16 करोड़ raise किया. 16 करोड़ raise किया. Last valuation was say 50 crores. Now there is a Series A investor coming who is saying I'll put in 50 crores at 300 crores. मेरे साथ actually हुआ. I was invested in a company called Stage. I had invested at a 5 crore valuation. Valuation kept increasing. Bloom came in. Series A, they put in 50 crore at 300 crore. Somebody who's putting in so high, and you have managed to negotiate with them. You have told them there's a different class of shares. The investor is okay. तो पुराने investors को तो ultimately एक bump up चाहिए ना valuation में, and at times partial exit चाहिए. Then they will all agree.
Thank you, Apurva.
Any other questions before we plot ahead?
Apurva, slightly different question. In the beginning, also you mentioned that when you're doing a friends and family or an angel round, you can have like multiple people putting in smaller checks. My question is it not? Is it advisable to have too many people come in and put their checks, because eventually, मतलब काफी सारे लोग हो जाएंगे, then you will be answerable to so many people, so many differences of opinion. Future round maybe probably clutter हो सकता है. So like, what's advisable?
तो इसमें एडवाइजेबल इज, वो बोलते हैं ना कि शुरू में मैं मरता क्या ना करता. तो अगर आपको 1-1 लाख के भी 100 लोग मिल रहे हैं, एंड दैट्स द ओनली वे टू रेज इट, जस्ट रेज इट यूजिंग आरयूवी और अ सिंडिकेट. तो इससे क्या होगा कि इवन इफ एवरीबडी हैज डिफरिंग ओपिनियंस, you can listen to them, but you can do whatever you want to do because you own the RUV. You are the decision maker. Or Karan runs the syndicate, or CJ runs the syndicate, or Apurva runs the syndicate. You only need to be aligned to one person.
Got it.
किसी को सुनने की जरूरत नहीं है. फिर आपने 1 करोड़ रेज किया 100 लोगों से 1-1 लाख करके. It's through a RUV. Even collectively, they will only own 10%. तो 10% में तो वो कुछ कर ही नहीं सकते ना. They can just give you ज्ञान. So don't worry about that.
Got it.
Important concept here to understand is to get it through a syndicate or RUV so that you
Yeah.
are not facing multiple people for signatures. And
Hmm.
इसमें RUV is preferable over a syndicate.
Okay.
The difference is RUV में you will get the investors. In a syndicate, your lead syndicate owner will get the investors, or it will be a combination of you and. Yes, Ravi.
So when we talk about the valuation, there is always a fight कि कौन सही है, क्या सही है. So when we see the valuation, it's based on only our numbers, or it also depends on the market scenario या फिर growth क्या है company का. एक competitor ने हमारी stage पे कितना valuation पे उठाया था, तो वो भी factors consider किए जाते हैं valuation के time.
ये सारे factors किए जाते हैं. Let me get this slide up. So these are some of the different valuation methods by stages. I was just working on this slide in the morning. Typically, जब early रहता है, you could use Dave Burkus method, replacement cost method. We are already at 11, so we'll not be able to get into every method. Valuation also. So this is the bottom-up financial mechanism to value a company. एक top-down होता है, which is a multiple of, which is basically जिसको बोलते हैं industry multiple and how fast you're growing, which is this slide. So if you're a consumer brand and you're doing very well, you would get a 8 times to 10 times. If you're doing well, you would get a 6 times. If you're not, if you're okay and you're a consumer brand, you will get between 2.5 to 4 times. Does that make sense? These are all consumer valuations for early stage. So Bombay Shaving Company का तब खाली 65 lakh monthly revenue था. Today they almost do 8 crores monthly. All these slides will be shared with you. So don't worry about.
One quick question. So are these multiples valid over a certain revenue threshold or in early stages as well when you're sub 5 crore ARR?
देखो सब 5 crore में क्या होगा ना आदित्य, if you narrate a very powerful story, product is differentiated, आपको typically 4 times 5 times मिल जाएगा. So if you say you're 2 crores 2 crores of revenue and we manage to get in and we are not raising a lot, so we say we are only raising यार 1 crore raise कर रहे हैं 2 crore 10 crore मिल जाएगा.
Got it.
If you are a second time founder, बहुत सारे exceptions हैं इस rule के. Actually, I was really struggling to create a slide around valuation because there is a bottom up, which is a financial, then there is an industry multiple. There is also founder pedigree. If you are a second time founder, so Bella Vita का founder है आकाश, उसने 600 करोड़ की कंपनी बनाई Bella Vita perfumes की.
Right.
अभी वो seed round कर रहा है. He's raising 10 crore at a 100 crore valuation. He only has the product, कोई traction नहीं है.
Got it. Got it.
Right? But again, the trick to remember is how much will you own after 4-5 rounds, plus you will claw back. So don't get very fixated on valuation. Important thing is to get the right people and ensure that you're able to use the money very frugally to grow. अगर एक छोटे scale पे business is a mess, जैसे if you're, I would say if your ROAS is less than 5 is considered good, 8 is very good. There are lots of DTC brands which do 12.5, 13. If your ROAS is less than 5 and you raise 1 crore at 10 crore, कोई फायदा नहीं है, पहले ROAS fix करो. Which means pricing improve करो, sourcing improve करो, do some growth hacks, because that money is then not being well utilized. अगर ROAS अच्छा है, you will kill it with that 1 crore. You will not need to raise again and again quickly because the money is rotating and your cash flow will fund your growth. So fix gross margin, fix average order value, bundling, fix RTO, fix distribution, fix CAC to LTV, fix repeat, fix ROAS. Without this being fixed, you get in more money. You will end up burning through it fast. You will not be able to show success and then raise a higher round. वो challenge होते जाएगा. तो early stage में सबसे important होता है fix basics, so that when you scale, you get the benefit. Otherwise, basics are horrible. You scale and it's horrible into 10. Does that make sense, people?
Got it. Got it.
Yes,
Now-
it does.
Now, SaaS companies, mein your multiples are, even if you're early stage, you can get a 10x multiple. Very good SaaS companies go as high as 25x of revenue, 30x of revenue. Companies which are growing at 20, 30x typically follow, which are valued at 20x plus, follow the rule of 40 in SaaS. Rule of 40 says growth plus EBIT should be 40 plus. 30% growth, 10% EBIT. SaaS companies don't talk about CM1, CM2. It's basically revenue, ARR, and EBIT. If your growth is 10%, then 30% EBIT. And rule of 40 mein shuru mein growth is more important than EBIT, and later on EBIT becomes more important than growth. Now EdTech mein alag, EdTech is consumer internet. It's not consumer. Right में जो consumer brands लिखे हैं, they are consumer. You're selling physical products. You're selling a garment. So Jenny, like, look at Maneuver. Look at Go Fashion, which does leggings. So I've tried to get a combination of food, beverage, right? EdTech is consumer internet. There you can go 10 times, 50 times, and valuations have drastically corrected. So EdTech maybe those valuations don't hold true. Any questions here? Now, I was trying to see कि early stage mein typically when you're valuing your company, every investor will typically have a version of this spreadsheet. So Aditya, to your question कि मुझे 4x मिले कि 10x मिले, how does an investor decide कि whether you're worth a 10x? So experience. कितने साल का experience है? Are you fresh out of college versus old? How many years of relevant experience? So if you say, you know, मैं मुकेश बंसल हूँ, I built CureFit, relevant experience, right? Experience as a CEO, experience as a operator, CFO, experience as a product manager, experience in sales, and finally, no business experience. So this just shows how does an early stage investor think about how to value a founder. Now, this is my mental model, but everybody will have some variation of this mental model. Like when I do early stage investing, this is what goes through my mind. And because I've been investing since 2010, I don't need a spreadsheet, but this is what goes on in my mind. A lot of early stage investors will have this. So, Nimisha, that ship rocket pitch day, right?
Yeah.
We had a very simple version of this spreadsheet on which we were ranking all of you.
Yeah.
Early stage mein kya hota hai? Team should be excellent, which is the first. Opportunity should be very big, and ideally, competitive environment should not be very competitive, or if it is very competitive, you should be doing something very unique.
Certainly.
You will get all these slides, so don't, ek hi ghanta tha, so we could not obviously cover everything. So I have one request, Karan. We're out of time. If we can do one more call in the coming week. We haven't got to what is the ideal pitch deck. What I will do is, as a pre-read, I will share this. I will also share 2 templates. One is a template from Sequoia, keep it confidential to you, which is what is the ideal pitch deck according to Sequoia. The other is, I sit on the jury of Harvard alumni का जो हमारे pitches होते हैं. According to Harvard Business School, what is the ideal early stage pitch deck? So I'm going to share 2 templates with you on WhatsApp group. We will have a follow-on call which Sapna and Karan will fix up. We will complete this. I know lots of you have more questions. And most importantly, we'll spend 30 minutes on perfecting what's a perfect pitch deck. Does it make sense?
Sure.
Yes.
Okay. Quick show of hands. We can see it on the screen. Did you find it useful?
Awesome.
Yes. Very, very helpful.
Very helpful.
Yes,
Very helpful.
yes.
Very helpful.
Very, very helpful.
Thank you so much. And Karan, if you can just take all these questions and email it to me, I'll add answers to these and cover it in the next call. CJ, your
Can
hand
we
is
also
up.
send questions? Can we also send questions for the next
Yeah,
call?
please do.
We can do that.
Please do. We'll keep covering it. Jenny, question. Your hand is up.
No, I have typed in and this is helpful. Thank you.
So, Karan, if you can just take all questions, email it to me on one email. Also, please keep your questions, feedback coming. We want to make it incredibly useful for you. Like, once we are done with these 3 months, you should be able to ace fundraising. Like, we really want to get you to that level where you're unfazzled, you're confident, you're able to explain, you're able to defend pricing, valuation. Excellent. Great. Thank you so much.
Thank you for your time, Apurva.
Thank you. Thank you.
Thank you, Apurva. It was super duper helpful.
Thank you.
Take a picture.
Thank you. Very helpful.
Thank you.
Maybe बाद में.
Thanks, Karan. Thanks so much.
All right. Thank you.
Everyone else, thank you so
Bye.
much,
Bye.
everyone.